Hi everyone, it's your daily 10-minute business and finance news wrap for this Thursday, the 4th of November 2021. Later, more on cryptocurrencies, but first, the ACCC is warning that prices for some products will rise ahead of Christmas and that consumers should plan to purchase Christmas presents now to make it in time for the holiday season, especially if they're coming from overseas. Now, that's because of the global supply chain squeeze being exacerbated by COVID delays as some workers have to isolate and as a global economic recovery pushes up demand and as a result, shipping costs, which have risen 7 times since the start of the pandemic. For more, Diana Danjanovic spoke with the ACCC's Chair Rod Sims.
Is it true? Do we need to start our Christmas shopping now to avoid disappointment?
I think it's a wise thing to do. The container freight system worldwide is in a mess, partly because of an unexpected increase in demand and partly because COVID has been playing havoc, closing ports, stopping shipping, and the international freight system is so finely tuned that when you have a problem one area, ships are then late for the next one, they miss a berth, that causes all sorts of problems. It just cascades through the system. So there's serious problems with the container freight system at the moment.
So what's your message to consumers who might be wondering whether they should start their shopping early this Christmas?
Look, I think if you want to be sure that you can get something, I would buy it earlier. That will also help spread the freight load over a longer period and make sure increase our chances of getting goods here when we want them. I would, however, be prepared for some price rises because the cost of container freight has gone up 7 times. The cost of moving a container has gone up 7 times. That has an inevitable effect on things like furniture and white goods that occupy a fair bit of container space. So I'm afraid there is going to be a bit of consumer pain out of all this.
Now, how bad has the COVID disruption been and on the local import and export businesses?
The COVID caused problems are just enormous because the shipping system just hasn't been able to cope with ports closing down, ships having to stay offshore because they've got COVID incidents. It really is causing massive delays for companies that import goods, companies that rely on inputs to production. It's been a massive disruption.
That is the ACCC Chair Rod Sims speaking with Diana Danjanovic. Now, the Australian share market did rise today off the back of some record gains or record closes in the US. The S&P ASX 200 up 0.5% to 7,428. That even comes as the US Federal Reserve begins to taper its economic stimulus by about $15 billion a month. For more, I spoke earlier with Angus Geddes. He's the CEO of Fat Prophets. Angus, the market's up today. Why?
We had a strong night on Wall Street. The Federal Reserve left interest rates unchanged and sticking to their transitory line on inflation. So the US had a good night. We've also had some more stability in the Australian bond market and, a relatively benign outcome from the RBA meeting on Tuesday. So I think that's all added to the momentum in the market today.
Can we go into more detail about the US Federal Reserve? It is starting to taper, though, some $15 billion. What does this mean for the markets? And is Australia next?
Yeah, so the tapering that was announced on Wednesday, I think that was widely expected by the markets. So no surprises there. The Fed even left room to push the tapering program out if it's required. So yeah, no surprises. I think that the markets are looking for a lift in interest rates earlier than 2023. The markets are actually pricing moves by the central banks in Australia and the US as early as the middle of next year.
Let's go more detail about the transitory or the entrenched nature of inflation. You just said that the US Federal Reserve is thinking it's more transitory. A lot of companies are saying that they're starting to see inflationary pressures. Ingham's the latest to date, seeing increasing prices, right? Which camp are you in, and is it impacting the way you're investing?
Yes, it is. We're definitely in the camp that inflation is going to remain elevated for some time. We're seeing cost pressures pretty much across the board. I suppose many companies are trying to absorb those cost increases, but probably only a matter of time before they start pushing them down the line to the end consumer. So, I think that inflation is going to remain elevated for some time, and we definitely have a reflationary thematic across our investment portfolios.
So if consumer prices are going to be rising, this comes at a time where retail sales are starting to pick up slowly. The last quarter, we saw the biggest fall on record, but I guess it's as to be expected because there were so many different states and territories in lockdown, though. How do you see Australia's economic recovery coming along and its relationship with interest rates if we are talking about elevated inflation?
Look, I think the Australian economy really does stand to rebound quite strongly. As we open up and as the states begin to lift their borders. And I think that's going to translate into, higher levels of inflation domestically. We're already seeing a lot of wage pressure coming through. And I think this will force the RBA to act sooner rather than later, and likely next year.
And just finally, your take on cryptocurrencies. Yesterday, the Commonwealth Bank said it'd be the first in Australia, or the first bank in Australia, to allow crypto trading on its app. Today, ETF linked to crypto is smashing previous debut trading volume records. There's certainly interest. What's your take on cryptocurrencies?
Look, I think the cryptos are definitely here to stay. Arguably, the markets have actually reacted quite favourably to the cryptos in terms of them being an inflation hedge. They've benefited probably a lot more than the precious metals to date. And I think that, the blockchain technology, it's going to be around for a long time. The CBA decision really is just another step in the gentrification of those cryptos. So they're going to be part of the financial landscape for some time to come.
Angus Geddes there from Fat Prophets.
This On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It's not personal advice and it doesn't consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.